Welcome back to Opening Bell. It's time for the very latest here on the floor of the New York Stock Exchange. Ted Weisberg back with me, founder and president at Seaport Securities, joining me. And throughout the years, he's picked Meta. That has been a great one. You had Chubb. You talked about the exchanges, which then took off. You talk about the airlines, which then took off, no pun intended. But another great year. I mean, double digits again.
Well, yeah, double digits. I mean, and the third good year in a row. Go figure. Who thought?
Yeah,
right?
What happens next year? I mean, right?
Oh,
What's
well,
going on
let me
in
look
your
at my
mind?
crystal ball. I don't know. Let's see what it says. Who knows? Hopefully, it'll be a decent year. You know, it's the backdrop is still quite positive. Corporate earnings remain good, if not very good. Will it be a duplicate of this year? Who knows? Your guess is as good as mine, Nicole. You know,
would you take 5 to 8% or something like that? Maybe something a little more reasonable, closer to the annual returns of yesteryear?
You know, this year, as we turn the calendar, will be my 64th year in Wall Street. 64 years. I'd like to think that I've learned something in 64 years. And the one thing I have learned is not to make any kind of predictions on what next year is going to look like. This is a tricky, difficult, but yet fun business and risky. I just think on balance next year, hopefully will be decent. We've had 3 good years. You know, greed is a tough emotion to deal with, so we don't want to get too greedy. I think folks continue to have to do their homework. It's never easy. It's always risky. You know, it's all about finding the right rabbits in the right sectors, and the game keeps changing. The markets keep shifting, and there'll be plenty of opportunity. That we know for sure.
So, you know, you picked some great ones. You had Chubb, and you had Exotica, the eyewear, and many others. But when we talk about tech, do you have to have tech in your portfolio?
Oh, well, I think so, because tech is where all the earnings are. I mean, that is still the big growth sector. Clearly, at the moment, it looks like they've kind of run out of steam a little bit, but clearly it's also not over for the tech names. That's where the growth will be. That's where the earnings will be. You know, trees don't simply grow to the sky. Sectors rest. The good news is, as far as the overall market, is that the market breadth has spread out from the tech sectors. So other sectors are starting to do really well. Financials, for example, you know, which have been laggards. But almost every day there's a major bank stock on the new high list. And there are other sectors that are acting well. Even some of the energy stocks. Exxon, this week, Exxon made a new high. I mean, out of nowhere, Exxon making a new high. So the fact is there are opportunities everywhere. It's a cliche. It's not a stock market. It's a market of stocks.
And you're a stock picker in many ways, too.
Yes.
You think it's important to do your homework and pick a stock, whether it's looking at cash flow or the management or everything. What are some names that you think might work for 2026?
Well, you know, it's interesting, but first of all, we're staying with the same sectors. We're staying with the airlines, UAL, and we like the laggard of the top 3 would be American. That's an interesting play. We still like the insurance, Chubb. We haven't deviated from the names that we talked about last year. But some of the new names might be, for example, in the stocks that pay big dividends. Because in this environment of falling interest rates, which is a positive for the overall market, it's also a positive for companies that pay decent dividends. Because folks will start to leave, for example, the money market arena and start to look for equities that pay decent dividends, which is where we were in the environment where there was interest rates were 0. The big dividend-paying stocks were quite popular. So there are many choices in many sectors, but I think that will be a theme in 2026 as interest rates come down. And December is always an interesting month for us, and we tend to look through the graveyard of lumps of coal of stocks that have fallen out of favor to hopefully find a couple of diamonds.
Did you find a loser?
Well, we
that
found
might
plenty
be
of
next year's winner.
We found plenty of losers, but we think we found a couple of winners there. We're buying some Baxter Labs. We're buying some Dow Chemical.
Baxter Labs.
Baxter Labs,
Dow
BAX,
Chemical.
and we're buying some Dow Chemical. And we're also looking at Kraft Foods, KHC. All 3 of these names, and there are others, are trading where they are for good reason. They got problems. But basically, we're betting that these problems will be dealt with going forward, and we're thinking in the next 6 to 12, maybe 18 months, these lumps of coal will turn into diamonds.
Well, I'm glad you're still showing up because our friend Warren Buffett, who's been here on the floor of the stock exchange, today's his last day. And so he'll stay on as chairman for Berkshire Hathaway. Any thoughts on what happens to a, big conglomerate like Berkshire Hathaway? Or, it's clearly the end of an era when you see, Berkshire Hathaway's Warren Buffett, Charlie Munger passed, may rest in peace, Buffett stepping down. Your thoughts?
Well, I only follow Berkshire like everybody else from what I read in the paper. We don't happen to own the stock. I would say it's going to be a period of adjustment. Clearly, he has tried to pick very good people to replace him. But I remember when Sandy Weill stepped down from Citibank, and he appointed Mr. Prince the chairman of Citibank, and that was a big change for Citibank, and the stock did nothing for 5 or 7 years. So I think it's...
I'm looking at the chart here. It went from 290. This is a 3-year chart. 292 up to 542. It's at 504 right now. But and also just some of his investment style, like boring is good, right?
Well, once again, there's going to be a new sheriff or sheriffs in town, and they're going to have their own style. It will take time for them to prove their worth. And so I would say, once again, I don't own the stock, but I think it's a stock that's probably going to trade sideways for the indefinite future till the proof is in the pudding and we see how the new people do.
Yeah, and look, Buffett and private equity love insurance, it says. That's an area that you've always loved. The rails was something that he loved. You loved the rails.
Right, we own the rails, correct.
Is he calling you, Teddy? Is he calling Chubb?
Well, we owned the rails before he did.
Yeah,
I
sure.
can't say we owned the insurance stock before he did because he built his business on insurance
And last
stocks.
but not least, Bank of America, that's another one that you like.
Well, I like Bank of America because of the big money center banks. I think it's basically been kind of left behind, yet recently made a new high. But people forget that Bank of America owns Merrill Lynch. Merrill Lynch is a huge brokerage firm. It's kind of lost its identity under the Bank of America umbrella, but it still exists within the Bank of America, and it's a huge factor in the financial services business. And I think that's the real diamond in the Bank of America portfolio.
Can't wait to see you in the new year, Teddy.
Yes.
Got to go 65 years, okay? So you got to pay the rent.
Got to pay the rent.
Weisberg, Seaport Securities, thank you.